Welcome back to MK_investment_insights, your trusted source for timeless wealth principles, practical investment strategies, and actionable financial growth insights. In part one of this series, we explored how Napoleon Hill's law of success begins with mindset, having a definite chief aim, building a mastermind network, cultivating self-confidence, developing a habit of saving, showing initiative, using imagination, and keeping enthusiasm alive. Today, in part two, we go deeper into the next set of success laws, principles that focus on discipline, clarity, and consistency. These are the qualities that separate short-term luck from long-term wealth. 1. Self-control, mastering your emotions in finance. Napoleon Hill wrote that self-control is one of the cornerstones of achievement. Without it, even the most talented individuals destroy their own chances at success. In investing, self-control is about emotional discipline. Markets are designed to test your patience and play with your psychology. Prices rise sharply, and greed tells you to buy more. Prices fall suddenly, and fear tells you to sell everything. Without control, you become a victim of the cycle. Think about every financial bubble in history, from the tulip mania of the 1600s to the dot-com crash in the early 2000s. Millions of investors lost fortunes, not because the opportunities weren't real, but because they lacked control. They chased when the crowd was euphoric and panicked when the crowd was afraid. Self-control means creating a plan, an investment thesis, a risk management framework, and position sizing rules, and sticking to it regardless of market hysteria. As Warren Buffett says, the stock market is a device for transferring money from the impatient to the patient. 2. The habit of doing more than paid for. Over-preparation pays off. Hill argued that those who consistently give more value than expected eventually receive opportunities and rewards that others miss. This principle applies beautifully to investing. The average investor reads headlines. The disciplined investor reads financial statements, tracks industry trends, and studies macroeconomic conditions. When you do more research than the competition, you develop insights that give you an edge. Maybe you notice that a company's debt structure is more sustainable than its peers. Maybe you find an emerging industry that's not yet on Wall Street's radar. Or perhaps you identify a mispriced stock before it becomes a market darling. Think of this extra effort as intellectual compounding. Just like money compounds when invested wisely, knowledge compounds when you consistently do more work than the average investor. 3. A pleasing personality, building wealth through relationships. At first glance, personality may seem irrelevant to finance, but Napoleon Hill observed that wealth creation almost always involves other people. A pleasing personality isn't about being charming or fake. It's about being authentic, respectful, and trustworthy. In the financial world, reputation is everything. A strong reputation can open doors to private investment opportunities, partnerships, and collaborations that the public never sees. For example, consider private equity or venture capital deals. These often go first to investors who are respected in their networks. If you're known as reliable, professional, and fair, opportunities will naturally flow your way. Remember, wealth flows through people. Build trust, and you build access. 4. Accurate thinking, separating facts from opinions. One of Hill's most powerful teachings is the need for accurate thinking. This means separating facts from opinions, truth from speculation, and reality from noise. Today, more than ever, investors are drowning in information. News outlets, blogs, YouTube channels, and social media are constantly pumping out predictions, rumors, and hot takes. Most of it is noise. The disciplined investor trains themselves to filter information. For every claim you read, ask, is this fact, or is it just someone's opinion? Is this backed by evidence, or is it speculation? Accurate thinking prevents you from being manipulated by market hype. It allows you to make decisions based on reality. This is the difference between chasing a meme stock at its peak versus patiently investing in an undervalued company with strong fundamentals. 5. Concentration. Focus creates wealth. Hill taught that scattered energy produces scattered results, while concentrated energy creates powerful outcomes. In investing, concentration doesn't mean putting all your money into one stock or one asset class. It means focusing your strategy. Too many investors jump from one approach to another, day trading 1 month, crypto speculation the next, then flipping to dividend investing, then real estate. The result? Shallow knowledge, mediocre returns, and frustration. Concentration means mastering one investment approach at a time. If your strategy is long-term index investing, stick with it. If your strategy is real estate cash flow, focus until you understand every angle. You can diversify your portfolio, but you cannot diversify your attention. Wealth doesn't come from doing 100 things poorly. It comes from doing a few things exceptionally well. 6. Cooperation. Wealth is a team sport. Finally, he'll emphasize the principle of cooperation, the ability to work with others toward mutual benefit. In finance, this shows up everywhere. Investors form partnerships to buy larger assets. Entrepreneurs cooperate with investors to fund ideas. Even stock markets themselves are built on cooperation between buyers and sellers. The lone wolf investor may survive, but the cooperative investor thrives. By sharing insights, collaborating on ventures, and creating win-win outcomes, you multiply your opportunities. Cooperation is not weakness. It's leverage. Conclusion. These 6 principles: self-control, doing more than paid for, a pleasing personality, accurate thinking, concentration, and cooperation, form the discipline layer of Napoleon Hill's law of success. Combined with the mindset principles from Part 1, they give you both the vision and control needed to build wealth that lasts. In Part 3, we'll explore some of Hill's most surprising teachings: how to profit from failure, why tolerance matters in finance, and how the golden rule creates long-term financial stability. This is MK_investment_insights, reminding you that financial success is not accidental. It's the result of consistent, disciplined action. Keep learning, keep growing, and keep investing in your future.